Support for Radio Friends comes from LaBrunerie Financial, where they work to ensure a lifetime of financial security for people from all walks of life, from investment services to retirement plans. If you're looking for a trustworthy company that has the experience and knowledge to put your interests first, contact LaBrunerie Financial, a community-based investment counseling firm since 1966. Learn more at labrunerie.com or by calling 573-449-5313. Good morning and welcome to Radio Friends on Monday, April the 1st. Oh, this is April Fool's Day, isn't it? Happy April Fool's Day to you. Good to have you with us. We have Alex LaBrunerie. We're not fooling there. Alex LaBrunerie from LaBrunerie Financial. Good to have you, Alex.
Thanks, Paul. Good to be here.
Now, when you were on last time, we were talking about the market, the ups and downs in the market. I think that was back in January, wasn't it?
Yes.
And things were not looking all that great at that time.
That's right. So, since at the time, today when we're looking back at the fourth quarter of last year, the market was down almost 20%. It started the year as of early March being up almost 11% on the S&P 500. So that's a good start to the 19.
Yeah. So your philosophy is you can't look at the day-to-day operations of the market. You've got to think long-term.
Long-term, and 5, 10, 20, even 30 years.
So at what age does someone stop looking so far as long-term and start thinking a little bit in the near future?
I think that there are several rules or maxims or industry dogma. The age-based one is a common one, where if you're 70 years old, so you take your age minus from age 100, and you use that number as the percent to be in stocks. So if you're 70, you might want
So you subtract your age from 100.
Yes.
If you're 70, then you should have 30% in stocks.
Yes.
And
that's not by any means a perfect scenario, and people don't have to buy into that. But it tends to make one more conservative, particularly if you're deriving income from your portfolio.
Okay.
You may want to be more at 50-50 is what we think if you're in your 70s.
So if you're saying once you're up if you live to be 85 or 90, you shouldn't have very much in the stock market at all then.
Well, it's very subjective but if you're deriving income and you can't accept you don't want to go through a 30 or 40% drop because you need that money for long-term care needs or other immediate needs, then you really need to reduce your risk by reducing the stocks.
Okay.
Yes.
But if you're fortunate enough that you do not need that income on a daily basis, the stock market still in the long run is the best.
That's right. And then you can use the legacy, the U.S. stock market. Yes, it's our economy. Patterns our economy generally. So at that point, that person in that position you mentioned may be thinking about then the next generation and their children and their grandchildren. Yeah. So there are time frames now elongated to even their grandchildren, who will probably need a lot of thinking about what their world looks like.
Now, you brought some breakdowns here. If you just share it with the audience.
Well, and this is as of March 11th.
Okay.
I mean April 11th. Sorry.
No, March 11th.
Yeah, March 11th.
Right.
The S&P was up 11.48.
That's from January 1st.
Yeah, just year to date.
January 1st.
Of this year, yes. Yeah. The NASDAQ was up 13.52, and the Dow Jones was up 11.62.
Okay, so if you were in any of those, you increased anywhere between 11% to 13%.
Just from January 1.
From January, yes. Okay. Now
very short term, not 30-year time frame, Paul.
That's a very short term.
It's a 90-day or less time frame.
That's almost eye-popping, though, when you say, oh, my goodness, a 13% increase on my investment. When I look at my savings account, I get a 0.02% or something like that.
Well, almost as eye-popping as the loss that people saw in December.
Exactly.
Which was double digits.
So you got to keep that in mind, because that was gut-wrenching also.
That's right.
When you were looking, I didn't look during that period at all, because I didn't want to see what was being lost.
Yeah.
You just know it, that it's there. But but you think of what you lost in December, but you almost made it up in 3 months.
Some people, I mean, it's very subjective, but yes, the market had found a bottom for the time, at that moment in its history.
Okay, what are most people thinking now? Are we going to stay in a good market? It's called a
bull
market. Yeah. Are we going to stay in a bull market? Because we've been in a bull market for about 10 years, right?
Yes, since the Obama administration.
Yeah. So is the bull market going to stay, or are the bears going to come in?
Well, that's the multi-trillion-dollar question, this being, I think, the American economy probably has some strength in it based on what economists are saying. What the Federal Reserve Chairman is saying, but just how much strength and how vulnerable it is to outside shocks, it's going to be anybody's guess.
Right. And the thing that I find amazing and puzzling, because I don't understand the financial world, but all it takes is for one person to make one comment which can send everything into a tizzy, or it can send everything up through the roof.
Yes. Yeah, particularly a powerful person like a Fed governor or a Fed chair or a president.
Now, why does it happen?
Or a CEO.
Why does it affect the market so quickly?
Well, I think our market is very finely tuned to the news, and the valuations based on whatever the information was can change. Mm-hmm. If it's bad news, it's going to drop the stock.
And a lot of this trading is done it's all done computerized.
Lot algorithmic trading.
So that can make a change very quickly.
Yes, and then humans can override it too.
Right.
If there's some breaking news.
Okay. We're just about out of time, Alex, but what's the best piece of advice that you can give to people listening?
Look at tax advantage ways to invest for retirement, save for retirement. America has a retirement problem, even a crisis for the coming generation, and monthly savings, is very important to build into one's budget.
Right, just have it taken out of your paycheck. Right. Yeah. Better Roth IRAs or traditional?
Depends on your age and inclination.
Older age?
If you need tax shelter immediately, the traditional would be better most
Otherwise,
likely.
the Roth.
Yeah.
Okay. If you got any questions, they'll answer all of them for you at LaBrunerie Financial. And how do they get in touch with you?
Here in Columbia at 573-449-5313.
Okay. Or your website?
Website, LaBrunerie.com, or 1-800-736-7460.
Okay, Alex LaBrunerie, always
Thanks,
a pleasure
Paul.
to chat with you. I appreciate it. I like that bow tie also. See you tomorrow. Bye-bye.